Hello, hello. Welcome back, shoppers. Welcome to Chapter 2 in this course on how to properly shop for a home loan. And as you can see in the outline next to my big head here, Chapter 2, we are going to cover big banks, brokerages, lenders, and I'm going to make a quick mention to small local banks and credit unions. Each of these sections is going to be divided up into a separate video, so you will hear me say reference to sections and videos. And if you just happened upon this video, this is part of a home loan shopping course. It is part of a playlist, so it should automatically start the next one if you want to watch the next one. Also, this outline that you see here is hyperlinked and it's in the description of this video. So you can jump to any part of the course you want to. Just go in the description of this video and access that if you would like. So let's get into it. Hey, welcome back, home loan shoppers. Welcome back. Let's go ahead and kick off Chapter 2 with Section 1, the big banks. I'm going to mention 3 pros and 2 cons with the big banks, starting off with, in my opinion, the biggest pro. That is the jumbo interest rate pricing. The interest rate pricing on true jumbo loans. For those of you who are not familiar with it, the jumbo pricing starts at a certain threshold. That threshold is based on the county that the property is located in. For example, the county that I live in, jumbo loan pricing starts after $1,149,825. Prior to that, I'm in that conforming rate pricing, whether it be a regular conforming or high balance. But anyway, just know that when you cross a certain threshold, you're into that jumbo rate pricing. I will put a description, or on a description, a link in the description of this video, a link where you can look up your county and see if you're in the what the jumbo threshold for your county is. So with this jumbo rate pricing, time and time again, the big banks have more aggressive pricing. I remember when I was working at the lenders, some people would call in for their jumbo loans and the pricing would not even show up on there. And the pricing, when it did show up, it was terrible. So you're doing these big loans and you're well qualified, which, by the way, that is going to be a huge part of it. You do need to be well qualified, and well qualified refers to someone with credit scores, middle or qualifying credit score, we call it, exceeding 740. You're talking someone on a purchase putting minimum 20% down, but preferably like 30% down. You'll get better pricing. And if you're doing a refinance, minimum of 80% loan to value, preferably 70% loan to value, you will get better pricing, stable, verifiable income, and a nice chunk of money in the bank. You get the point. Well qualified. If you're not well qualified, then not so much. But for well qualified individuals with loans that sizes, hands down, you probably want to gonna meander on over to a bank for that jumbo pricing. That's a huge one for me. Okay, so that's pro number 1. Pro number 2, comfort. And again, it's going to depend on the person. Working in the banks, I've experienced this, the comfort that people feel because they're in that bank all the time. Some of these customers come in there weekly, business customers coming in there daily, dropping their deposits. And, they get to know the tellers, they get to know the bankers, they get to know the loan people, the investment people, whatever. They get to know that staff. And, when it comes time for a loan, it's comfortable. It's like, hey, let me go over to my loan guy over here and chat it up and see what's going on. And that's a huge plus. And so even if you're like, say, in the conforming loan pricing where the lenders and the brokers kick butt, and let's say your bank is a little higher or even a lot higher than those brokerages or those lenders, for some people it doesn't matter. It's that comfort level. They rather go where they feel comfortable, where they do their banking every day or every week, whatever it is. So comfort, that's a huge thing for folks. And if that's important to you, as long as you're not getting totally ripped off, you take some higher pricing to get that comfort. It's worth it for you, That's why people shop at certain stores over other stores, or they go to a high-end retail store versus Target or TJ Maxx or something. They're paying more, but they get a level of service that they want. All right, so that's pro number 2, comfort. Pro number three, convenience. So taking off from what I mentioned about, there's some of these local business owners would come in there every day dropping their deposits. If they have to do something on their personal banking, it's right there. They have to do something for a lot of times they'd have investments, it's right there. They want to do something about their home loan or their home equity line of credit, it's right there. It's convenient. I've had people even come shoot the breeze. They want to shoot the breeze with their loan person, even if they're not doing a mortgage transaction. They'll want to stop by, and they might ask, hey, what are rates looking like, and things like that. It's convenient. You got everything there in one place, or you have a few things, your deposit accounts there, etc. But it's convenient for you. And for a lot of people in this busy ass world that we live in, you don't have time to do that stuff. So it's convenient to have it all in one spot. So even if they might not have on certain type of loans the best pricing, it's damn convenient. So those are three big pros and going with the big banks. Let's talk about a couple cons. Con number one. Woo! This is a big one for me. Because I've had to fight this as an employee, fighting for my clients, my customers, so many times over the years, fighting with underwriters. Picky ass underwriting. Holy smokes. Picky ass underwriting you could have at some of these big banks, or a lot of these big banks. Picky. Not to be confused with strict underwriting. Strict underwriting is, if the loan doesn't meet the guidelines, well, they want to be strict and give no variance on that. All right. That's just strict guidelines. That's not unreasonable. Picky ass underwriting is when it meets the guidelines. It meets their internal guidelines. It meets the investors' guidelines. It meets everything within credit policy. It's good for the customer. It's good for the company. Why not do the loan? But the underwriter can still make the call. Even though it meets all the guidelines, the underwriter can still make the call to decline the loan. I've had to fight that so many times. Like, why the hell are you declining a good loan? It meets all the guidelines. It works for the customers. It works for us. But no, they just have a feeling and they want to be a picky ass and turn it down. I ran into that a lot while working at the big banks, and you might run into that too, especially if you're just not that absolute pristine, well-qualified customer. I've been at those meetings at the banks behind the scenes when literally they're talking that kind of trash, how they don't want to. I actually literally heard this one time about the this thing that people say as a joke, where they don't want to lend money to people who need money. I had a senior underwriter actually say that seriously during a meeting, one of those behind the scenes meetings. So yeah, picky ass underwriting can be something at these big banks. All right, so that's con number one. Con number two, is another one for me. And this usually just applies to their refinances. Slow ass freaking molasses in the winter time. Slow ass processes there. I'm telling you, that could be, and it's more so with their refinances. A lot of the big banks do much better on the purchases because they've got so much pressure behind it from the real estate industry, from in particular the real estate agents out there. They don't want to get a bad name with the agents bringing their clients, having their clients' loans done there, and they're missing close of escrows for being slow. So a lot of the banks, they put a priority. Big banks will put a priority to their purchase loans, and they have absolute shitty service quite often on their refinances. So that's a big one that I've had to fight so many times while working at two of the biggest banks out there. Slow ass processes on the refinances, and you combine the slow ass processing on the refinances combined with the picky ass underwriting, and that could be a friggin' nightmare in dealing with them. So there we have it with the banks, 3 pros and 2 cons, and working with the big banks. So this concludes section number 1 in chapter 2, or if you want to refer to it as video number 1 in chapter 2 in this home loan shopping course. Let's go ahead and move on. If you're in the playlist, it should jump to the next one. If not, you can see it in the description of this video. Go ahead and click on the next section 2, and we'll move on from here.